Hello traders, welcome back to my YouTube channel Freedom with Forex. Today I got an exciting video. Why you still losing money in Forex market? I will show you in details the reason the people are still losing money. But before I go into it, if you haven't subscribed, please subscribe my channel right now and click the bell icon so that you get notified every time I upload a new video. Okay, without further ado, let's dig in right now. So I have 5 reasons why people losing money. Number 1 reason is the direction. Number 2 reason in stop losses. Third reason why people losing money is psychological barriers. Fourth reason is risk management, and the 5th is over trading. I will go in this video in details all of this reason. Okay, so the first reason, as I mentioned, is direction. What do I mean by that? Is this direction mean the market direction, the way it's going in particular way, either it's up or either it's down? Yes, that's right. Most of the traders, they get it wrong which way the market is going. All right, market is going upwards, but they think market gonna turn around and reverse. So what they do here, they come up in the over here somewhere, they start selling. All right, they make a couple of pips, and before they know it, market start going up. All right, and vice versa. They come here and they think market's gonna go down, they sell it here, but obviously market completely turns around and go opposite direction, and they lose all of their money. All right, so we have to figure out how we can get the direction of the market correctly. Okay, and we have to figure that out before everybody else does. All right, and if you figure out the direction after everybody else does, is too bloody late. Okay, so basically we have to anticipate which way the market is going to go next 1 to 2 years time. For example, this market is coming down in downwards movement. Okay, by the way, this is a daily chart, very powerful chart. So in this chart you will see the original direction very clearly, unlike any other chart. So market is coming down this way. Oh sorry, the wrong one. Let me get the other one. Market is coming down, right? If I change the color, it will probably be more visible. Okay, and then market goes up this direction. All right, now as a trader, most of the forex trader, what they do, market comes here, right, and they thinking, okay, they don't know whether this market is gonna go down here because we are up top here. Nobody's selling here. 95% people are not selling here. They're thinking still to buy because it's a market going up. But sure enough, market comes down and retrace and then go crashing down, right? It crashing down. If you had sold anywhere here or anywhere here, you would have made money. The problem is that you waited so long for market to give us a clear direction. But when you see a clear direction on the chart, it's too late. Okay, you have to sell over here, here, this area or this area. Not here. You can't sell here because see how much market retrace. You cannot sell here or here because this market already down by so many pips. In fact, this market went down. Initial movement was 279 pips, and then it went down by 373 pips. Okay, so you have to anticipate and get into this movement before majority of the players, majority of the trader does in the market. Okay, and it started to reverse. See, market retrace. It retraced by almost 60%, 70%. All right, but would you be buying here? If you buy here, then obviously you're gonna make a lot of money. But the problem is that we don't see this picture. We don't know this market. The market is here, and you would be thinking, oh my god, this is going down, I will be selling. So you sell here. You should have started selling here or right here, but you start selling here. But as soon as you put your sell order or click the sell button, the market reverse and you lose money. Okay, so you have to get the direction correct. That's your number one job as a trader, to figure out the future direction. Okay, now look at this, and then market reverse, okay, and then went up again, and the reverse very strong, very hard. It came down almost the lowest low before, and then market reverse back up again. Right now market's here. All right, market is close today because it's weekend, but this is the latest data we have. What would you do right here? Would you buy here or would you sell? What would you do? That is the question. If you can get that right, accurate, you will make money, you will survive as a forex trader. But at this stage, if you start thinking to buy, I can tell you right now, there's a long way to go for you to learn how to trade the forex market. If you started thinking buy right here, I'm not saying you can sell right now. I'm not saying you cannot buy right here. There is no way you should be buying right in this place. Even though it's a daily chart, you may be able to buy in 1 minute, 5 minute chart, but come on man, who trades on 1 minute, 5 minute charts, right? You have to think long term. So basically, you have to use the longer time frame, bigger time frame, 4 hours daily, weekly if you can, and figure out the market direction. Once you get the market direction, stick to the direction. Okay, even though market behave different way, create illusion, do not get sucked into it. Keep with the big boys, big direction. So number one reason you're losing money, because your direction is not perfect yet. Number two is stop losses, and I can tell you 70% people lose money because of the stop losses. 70%. As we know, the statistics shows that 90% people losing all their money in forex market, and out of 90%, 70% losses come from because of the stop losses. And you can say, hang on a second, stop loss supposed to protect my capital, right? The stop losses should protect my capital, but why am I losing money? Have you asked these questions? Because the stop losses is a big major factor of your failure in forex market. So we have to use it very wisely. These stop losses can act as a double-edged sword. It can protect your capital, but at the same time it will eat up your capital slowly and surely. I've seen many traders, they're losing their capital because of stop losses. And I'll give you an example right now. I know you guys like examples, all right? So let's have a look. What's happening? Sorry about that. Let me just get into, okay, let's have a look. Let's say you wanted to, what would be the good, okay, let's say this is it is a downturn market, right? And you want to sell, and the market went up 3 days up, and you sold here. You sold right there. If I can get a line, it'll be easier. So let's make this colorful. So you sold right there. See that red candle there, inverted hammer? You sold here, and your stop losses where? Just above that red candle. You haven't seen this market, okay? You put it right there. You know this market is going down. See how strongly this is coming down? This market will go down for sure. And as soon as you saw the red candle, that inverted hammer, you sell right here, and you put stop losses 10 pips above, 20 pips above. All right, that's the typical stop losses we see in the market. And what happened? Market goes straight up. See that? It takes your stop losses. Takes your stop losses. So what happened? You end up losing money. But 2 days later, the sale started. You got the direction right. You got that right. If you get the direction right, 50% job is done. However, because you didn't get the stop losses correct, you did not know where to put the stop losses, you end up losing money. So what is the point of, even though you got the direction right, but you end up losing? What is the point, right? We have to get the direction right, first of all, and second, we have to get the stop losses right. Okay, but let's say you wanted to sell again. You lose here, and then okay, you sold that candle here, okay, and you want to sell here, and you put right above. You put your stop losses right above, like that. Let me bring this. You put right above. So what happened? That red candle takes your stops loss out. Take your stops, and it goes down in your direction. It happens all the time. It happens with all of us, right? But we have to make sure it doesn't happen all the time and happen less than our winnings, right? And you'll be like, after losing by the stop loss, you'll be like, yeah, I got the direction right. You know, I knew it's gonna go down. But what benefit does it to us? We know the direction, but we could not be in the direction we are stopped at. So don't be too stingy about the stop losses. Okay, don't be too stingy, but don't be too wide either. All right, we have to figure out the right way, right moment to put the stop losses. All right, I'm not going into details how to put the stop losses. I'll make more videos about the stop loss, why to put exactly and not to get caught out. All right, so that was the second reason why 70% trade end up losing. Third reason, I think that is the most important reason people lose money in the forex market, and they quit. They end up giving up trading altogether. That is psychological barriers. What do I mean by psychological barriers or emotional barriers? Human beings, we are dominated by default with certain characteristics. Number one is greed. Number one is greed. Number two is fear. These two reasons we're losing money, greed and fear. And we are, as a trader, are driven, controlled, manipulated by greed and being fear. So we have to actually make a correction. We have to adjust. We have to overcome from greed, from fear. How does the greed end up making our trade into losing? Okay, let's do another example. I'm talking about from greed point of view. All right, let's say market going up. You see a uptrend direction, market does retrace, and obviously you don't buy here, right? Because that's what most of the people do. And the market goes up again, and now you see, oh my god, that's the uptrend. You see the higher getting high, even though you haven't got the higher lows, but it possibly you're gonna get another higher lows, right? So you don't buy here, obviously, you don't buy here, obviously, and you see, oh, it's going up. And what do you do? Most of the traders, they buy here at the top. When buy started from here, you should have started buying here, but you bought here. Anyway, you bought here, okay? And then, sure enough, as soon as we bought it, it goes down, it retraces, like that. And you're like, far out, man, I just bought it and it went down. You started panicking. You started panicking, right? And then market, boom, goes very strongly. And you're like, hang on, I have to make an adjustment with that. Otherwise I won't get this example right. Okay, let's do it again. So retrace, right? And then boom. Now you're in profit. Now you're in profit. So you bought here, you were in loss, but now you're in profit. You're thinking, oh my god, I'm making money. Initially when you enter, you want to make 100 pips, for example. And now market went up, you're on 100 pips profit. You should have had your take profit here, but what do? like most of the trader, you increase your take profit. You said, no, market is going to keep going up, so I'm going to increase my take profit. You don't close your trade, even though you're on 100 pips profit. So what happened? From this point, market reverse, not reverse, retrace. Now, 40% of your, no, even 70%. 70% of your profit is gone because you entered here. From this point, you only had about 10% profit. Now you got only 10 pips. 10 pips. Initially were in 100 pips up. Now you're only 10 pips in profit. 90 pips is eaten by that reversal, that retrace. Now you're kicking yourself like, far out, I should have closed it here. I could have made 100 pips. Now I'm down by 90 pips. Obviously you don't close here because you're beating up yourself like, come on baby, give me one more push. Give me one more push, I'll close this trade. So what happened? Sure enough, market goes up. But do you close it there? Do you close it there? You don't. Reason? You're thinking, I think this market gonna keep going up. Keep going up. Even though you're on 150 pips profit, you don't close it. You're thinking that you're gonna go up and you're under control by greed, that I'm gonna make more money. You're like, I got this baby, I got this trade, I'm gonna make a killing, I'm gonna retire from this trade. And as usual, market goes like that. It goes like that. Where are you now? You had bought here. Where are you right now? Where is your? You are in loss. You're in loss. Not by hips, but you just a couple of pips down. What's your emotion on the stage at the point here? You were in one touch 100 pips and the 150 pips in profit. Now you're in negative. What would you think? That far out, I had the direction right. I was in profit by 150 pips. Now I'm in loss. Okay, are you gonna close this and take loss, or are you gonna wait? Most of the people, what they do, they started hoping and praying. So please, you pray to whoever, and you wanted to market to go up. Not here, not even here. You say, I don't want 150 pips. Give me 100 pips. I'll take it. You started bargaining with the markets. Give me 100 pips. Please let the market come here. I will take my profit. I promise. You started negotiating with the market. But that doesn't happen, does it? That doesn't happen. What happens? This happens. It goes up by 10 pips, but you're not satisfied with the 10 pips or 20 pips because you were in 150 pips. And market goes bang. Now, you were lost down by 50 pips. You're now down by 50 pips. All right. So what do? Either you close it, you stopped out. All right. You're frustrated. You're angry. All sorts of emotional comes into mind, and you just want to, run away from this trade. You don't want to take any responsibility, and you close the trade. You end up losing money. All right. And sure enough, as soon as you close the trade, market goes like that. It goes like that. It happens all the time. It goes like that. And when you see this after you closing a trade, you're like, kicking yourself. You kick your dogs. You do all sorts of nasty things. I'm not saying you should kick your dog. Don't kick your dogs. All right. So that happens all the time. And this whole thing happened because you were under greed. Okay, so you have to eliminate being greedy when it comes to trading. And same thing with the fear. It's just the opposite. Fear of losing money. Initially you were in profit, but when it comes to fear, you started losing money straight away. When you lose more money, and you started praying and hoping market will go up so that you get at least break even. But that doesn't happen. You keep losing money, and the losses get bigger and bigger. You end up, closing your account. So you have to come come up with an idea how we can control. We cannot eliminate completely because as a human being that's impossible, but when it comes to trading we have to put them aside, keep them under check. All right. The fourth reason the people are still losing money is the risk management. Very interesting topic, isn't it? Everybody knows you gotta have a better risk management. Don't lose your money in one. Don't put all the eggs in one basket. Don't trade, big side. Don't do 50%. Don't take 50% risk in one trade. Blah 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 blah. Right? So what they say? Use 1%, 2% capital and per trade. Do 3%. Don't go more than 5%. Always use low stop losses. Cut your losses short. Let run your winnings. All these things we hear all over internet. But let me tell you something completely different. 90% people losing money in the forex market. They are doing all these things, right? They're keeping their trade under 1%, 2%, 3%. They're keeping the stop losses very small. They're letting the winning run. But why are they still losing? Why are they still losing? Because the fundamental of the risk management, we haven't got it right yet. The fundamental, in my understanding, the risk management, in the first place, you don't take risk. If there is no risk, so there is not much to manage. Would you agree with that? If there is no risk, there is no danger, right? We don't have to worry about it. So first thing we have to do, we have to get in a trade that is less risky. I said less risky, not risk at all. There is a risk in every step of life, right? There is nothing with a risk, but low risk. One is the low risk. Let's come to the example. If you, let's say, they say you have to you not use more than 3% of your account size in per trade. Don't use too much stop losses. Let the winning runs. Let's say you follow these three mantra by the guru, right? So your market is here, right? As everybody else, you sell right here. You sell right there. Now you're thinking, I'm gonna only use 2% of my capital. I'm gonna put a small stop losses, and I'm gonna let my winning run. What's gonna happen to that management, to risk management? Is any of that gonna work? It won't work. None of them is gonna work because the market is about to retrace or reverse. The only problem is that you took a trade in a situation when you should not be taking a sell side. You should start thinking buy. When everybody's selling, you should start thinking buy. When everybody's buying, you should start thinking sell. If you had idea in your mind, I should be thinking buy. If you had bought here, your trade would work out just perfect. Very little risk. But if you are selling right here, no matter how many strategy you have to protect your trade, it's not going to work. You're going to end up losing the trade. So what I'm saying, you have to anticipate before participate. Okay, you have to get that right. If you don't get that right, no risk management is going to save your trading. I hope you understand that. Over trading, fifth reason, very common, especially in the new traders. When I was a new trader, I used to trade 40 trades a week, 40 trades. I remember I was doing 20 trades a day. So I was over trading. Obviously, I was making money, but I was losing more money. So don't over trade. All right. Look at the bigger chart, daily chart, 4-hour chart, weekly chart. Go for the longer time frame, and once you open a trade, stick to it, get the direction right. Don't be too stingy with the stop losses. keep your fear and greed in check. Risk management, you have to do it proper way, not the all the gurus says on the internet. And don't over trade, don't add to the losing trade. We hear all the time, but we don't practice it, right? So those are the main 5 reasons that people are still losing money in the forex market. And it's sad, but it's true. We don't learn from our mistake. So we have to we can't give up. We obviously cannot give up, because there is money to be made in forex market. It's not easy, because you are going against the most talented people in the world. Trust me, the forex business is brutal business in the market. There's nothing tougher than forex business. All right, because you are trading against the brightest of the brightest in the industry. So someone like you and me sitting in our bedroom and trading and going against them, come on man, what chance do we have? Unless we build our emotion in check, we build our direction correctly, we are risk managed properly, we have all these things in check and guarded and protected, and we work in calculated manners, then we can compete and possibly win. And you can win in this market, you can make a lot of money. All right, so if you have any questions in this video, please leave it below. If you haven't subscribed, please go ahead and subscribe, support this channel. I'm gonna make more videos on the stop losses, because that's a really interesting topic. A lot of people get confused, a lot of people get stopped out. You can really minimize that, and if you can get the stop losses right, your profit winnings will just skyrocket. Okay, I don't want to make this video too long. I'll catch you in the next video. Bye for now.